Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is August 7th, 2018, and I thought I'd take a look at crude oil, the ETF being USO. Main reason is that I was on the Ameritrade network earlier this morning with Ben Lichtenstein and Kevin Hicks, and we were talking specifically about crude oil. And there's an interesting component that's actually happening in crude that I want you to be aware of. So we'll go through some of the numbers and kind of be able to see some of the charts that I was referring to when I did the show earlier this morning. So crude oil itself is in a trading range. We'll cover that with the energy level, but it certainly is in a tight consolidation right now. All of the trends, at least according to our short-term trends, are all pointed to the downside, and then we have this ambiguous point right here with the technical rating, which bodes well for, again, the sideways action, the consolidation that's underway, with very little technical ratings positive or negative at the present time. And generally what that means is that the market in itself is indecisive as to what it's going to be doing, and it's setting up well for an opportunity for the market to make some type of a big move here. And so what I thought I would do is just go through some of the same numbers and give you an idea as to what was actually taking place when I spoke this morning. So here's crude oil way down here. The lower end are markets that are in consolidation phases, and those that are in expansive phases, whether they're positive or negative but explosive moves, those are the ones that are here at the upper end. So you can see that crude is identified as a market that is in a consolidation phase. Along those same lines, when we take a look at our watch list, which is where we really are looking at a lot of our technical overviews for the market, looking for different types of technical movements to the market. You see that crude oil is down here where it's slightly bearish, but it's still in that zone where the market is, for the most part, just not giving us any idea as to where the market really wants to go. So when we take a look at our technical rating on the deep dive, we're looking at the watch list, trying to get an idea as to what is actually taking place. And when it's in this low zone where it's barely moving, that's what it's telling us, that the market really is indecisive and not really giving us a clue as to what it wants to do. This one is slightly bearish, but still nonetheless it's in that neutral zone, if you will. The other thing I talked about was some of the seasonal tendencies to the market. So if we take a look at our top 10 list here, you can see crude oil is not at the top of the list, but it is at least on the top 10 list along with RBOB. If we take a look at the accuracy for that of crude oil, if I click through here, what you're going to see is that it is following and had been following its technical seasonal perspective. As far as the seasonal trend was very, very strong, where the black line was following the blue line very, very closely. It broke out a little bit and wasn't as strong, but it's back into that strong mode again on the 5-year charts. So here's where we stand at the present time. You can see that it's going to be a little indecisive here for, at least according to the seasonal charts, for at least a couple of weeks or so into August. Maybe a little bit of volatility to the upside, some more downside, and it's not until September into mid-October that the market has some form of strength. And when I was on the show, I was talking that in general, what we see is the top in the midsummer, and it goes into a lull and really has a low point in December. So on the 5-year charts, you can see that there's a little bit of a bounce September into a little bit of maybe halfway through October. If we look at a longer-term chart here in a 10-year, you can see that it typically peaks out here in July, and it's not as volatile. It's a little sideways consolidation, so that strength really isn't there in the 10 years, but then it continues to sell off. So there is definitely a seasonal bearish bias to the market, but I think for the most part we're going to be entering into sort of a choppy phase here, but then finish up the year with a bearish bias, no matter if we're looking at the 5 or the 10-year. The 5-year is just a little more pronounced with a tradable opportunity here, but that's not going on right now. As of right now, we're looking at the market sort of going sideways, as was predicted by the energy level and our other tools, the technical tools, are telling us that the market is basically in that sideways consolidation phase. So, the other thing that I pointed out in the show was that we are looking at both weekly and monthlies. I just have a monthly here. We are looking at US dollar versus crude oil. So it's a small chart, I realize, but going all the way back to 2007, all the way up until this past weekend, so just a couple of days ago, you can see that the blue line represents the correlation between crude oil and the US dollar. And for the most part, we see an inverse correlation between the two, where the dark blue line is, in this range of negative 0.5 down to negative 0.7. So it's not a negative 1 where it would be completely inverse, but they are inversely correlated. However, since 2015, that has changed, and the market has, and the correlation between the two has gone from a definitive negative correlation into something that is, if you pull this all the way across to that of 0, it's got a 0 correlation. So they're both kind of trading at their own levels. So if we take a look at crude oil by itself, let's get a feel for where the market might be heading. And when we look at that, you can see, one, the sideways consolidation. It's not a perfect consolidation. There is a little bit of volatility to it, but it is nonetheless simply going sideways, and we know that that's not going to last for a long time. When I was speaking earlier in the day, it was at the peak of the day, and there was an opportunity for it to break out. It didn't. It came back down to normal zone, if you will. And when we look at some targets for the market, the upside target would come back to this level right through here, and that number, as I was quoting on the show, is basically 71.50. The next level down, we could look at these levels right through here, with this one here, so I'll use this number, is 65.15, if you will. So there's a potential for the market to make a move one way or the other, and what I was saying is that we don't, right now with our systems, they're basically flat the market. We have one that is long and one that is short, and so we're hedged, long one, short one. Long one means a long system. S short means we're short a system. So right now we're flat, but we have an open position profit based upon that. But that hedge is not going to last for long. Eventually there's going to be a decisive move to the upside or to the downside, and it'll be in a tradable format. I don't think that a major trend is going to pop up here, but eventually there'll be some type of a pop to this consolidation phase, and there'll be opportunity here to make some money. You can see with heating oil and natural gas that they're, in this case, long, and they've got some nice open positions as well. But with crude oil, it's just simply in that hedged formation, and it's something that you just have to be aware of. So what I would have you do is watch the systems, obviously, but then watch this trading range, this consolidation, if you will, and specifically the technical rating, and perhaps they will give us some type of a clue as to which way the market's going to bounce. This will just simply deactivate and say we're no longer in that zone, but the technical rating should give us an idea as to where things go. And obviously, we would have you look at either the detail information or just simply the sector information, and just get a feel for whether or not the systems are going to trigger additional longs, additional shorts, or they're going to unwind the long side or the short side, but give us an idea as to which way it's going to break. So for right now, we're kind of in wait mode, but we're well positioned, I think, because with as many systems as we have in crude oil, we're going to be able to pick up on an intraday basis some clue and then be able to jump into those positions. So I always like looking at systems or markets that are hedged and specifically have that low volatility and that low technical rating, because those are the ones that are typically poised and ready to make some form of a major move. They don't really give us an idea as to which way, and so you're going to have to look and really watch this market and look for some type of a breakout. But at least I've given you some upside and downside targets as to where the market might potentially go, and with that, there's ample money to be made whether it goes up or goes down. Just watch your market very, very closely. So thanks for watching. I appreciate it, and we will take a look at another market tomorrow.